You came here for the truth. Today we are going to talk about asset sales. We're also going to look at China and we are going to look at the US debt. I need to get into all of these topics because it matters to you, your bank account, your investments, and the economy as a whole. Let's go. Another day, another repo. You could see again, over $1 trillion in this reverse repo. It doesn't ever seem to stop. And it's not expected to, of course. Fed officials weigh ending asset purchases by mid-2022. Reducing bond buying sooner could provide more flexibility to raise interest rates if inflation stays high and unemployment falls rapidly. People say today that, well, you know what? The Federal Reserve is just going to leave everything the way it is. They don't want to crash the markets. But this doesn't show you that what they've done previously. I mean, they create the boom bust cycle. If we look at the history and how the Federal Reserve was set up, we understand what they're actually trying to do. But people in their limited view of the world and, of course, of history will not be able to guide themselves to where this is all going. But anyway, they just talk about the different Fed officials who have come out, said their quotes, and quite frankly, you know, I've read many of them to you before. Essentially, it depends on where we go, but the most likely scenario right now anyway is that Jackson Hole is coming up in, about a week or two, and then that's the big event for them. We may hear something immediately, or we may hear it in September. Then that information will unveil whether or not we're going to see the taper in October, which was the hope and expectation from the Federal Reserve President Kaplan. He's saying October for the taper to begin. Now that could be a very small, majority of the total, but we don't really know what's going to happen, right? So at this point, we're just going by quotes, we're going by all of this and that, but I believe that we're going to find out some good details at the either end of August towards the beginning of September timeframe. So I will keep you up to date on that. Now, going a little further, higher inflation target could trigger jobs boom, former Fed staffers say. The Federal Reserve may be wrestling with an inflation problem, but two former senior staffers at the U.S. Central Bank argue that continued higher prices in the future may be what is needed to shift the whole economy into a higher plateau. I love that. And deliver a jobs boom that helps the broadest set of people. That's right. Inflation helps you. Do you see how they're twisting this? Do you see that? Anyway, S&P 500 doubles from the low point back in 2020. Anybody who had gotten in here had doubled their money over this period of time. And for stocks, that is really good. That's a good return. In business, of course, that probably isn't a good return, but this is a whole different story. People don't want me talking about that. So you could see what has been going on, and there's been a high, and here's another sugar high, and that is sugar, the commodity over the last year. You can see that it has accelerated just like everything else. I can pull this back a bit to the 5-year, and when we bottomed out, like basically everything else, April of 2020, it was under $10. Today it's at 20. And of course, we've seen these levels before. I could pull it back 25 years, and the peak was actually back in 2010 or so, 2011, 2010. Yeah, 2011, January 2011, that was at $33. So we've been here before, but I wonder where this all ends up. And we have gold. It has been sort of on this downward trend from its peak that was experienced, and it just has not been able to get higher. It came down in essentially what was a flash crash of about $100, and now it's trying to make that back. I covered this on my live, I believe it was, talked about how it looked like it was going to have to come back up because it was outside the Bollinger Bands. I'm not sure if anyone took notice of that information. China seeks to tighten rules on unfair internet competition, sending tech shares lower. This is what tech, not just in China, but all around the world, particularly the US, is worried about because the regulations are minuscule, even compared to other industries like financial and so on. This is the big worry. This is the big concern. And I think that people should get wise to the fact that it looks likely that at some point, they're going to be putting in additional regulations. What does that mean for the stocks? It's anybody's best guess, but I'm telling you right now, this is where the concern is. Look at the NASDAQ. Over the last month, it hasn't moved. So that should be telling you something. Number one, there is more investment than ever before from retail traders, and that's important. Number two, everything today, from stocks to bonds to housing, everything is relying on this easy monetary policy to persist forever. Number three, tech investors right now are very worried about regulation. They haven't had to deal with this before. What does it mean for the companies? What does it mean for the stocks? There's definitely been some pressure and some resistance for these particular stocks being able to get higher than where they were previously as a whole. And we will see what happens in the near future. Right now in China, they're pushing hard. And then we move into the economic aspects of this video. China economy under pressure as factory output, retail sales growth slow sharply. I'll give you some charts around that, but I just want to show you this really quickly. The US New York Empire State Manufacturing Index. So you had a record high of 43. That of course is an anomaly, but just take a look at where it is today, 18.3. If I pull this back over the last 10 years, we're still definitely higher, but if this is a downward trend at this point, so if that was just kind of a once in a lifetime situation, we'll see, but I will cover this for you, give you the different PMIs, all of these different things, these factors that add up to what we're seeing. I'll give you some of the PMIs for China in a second here, but I want to see the trends because comparing things to 2020 is not generally a good idea. As you know, everything fell through the floor. Here's the retail sales, industrial production, property investment, jobless rate, and asset investment out of China. And basically all throughout, these things are on a downward trend. Okay, take a look at this, the CPI and the PPI. Okay, back in 2008, the CPI and the PPI both skyrocketed. Today, however, the PPI is very high, but the CPI, there's a lot of I's here, is quite low. In fact, it's sort of on this downtrend. What does that tell you? That there's a disconnect here. This is a very unnatural state of inflation. Now, they tell you that it's the bottlenecks, it's the shipping problems, it's logistics, so it's going to be temporary. We'll see. It's gone on already. It's gone on longer than they expected, so we'll see. This just shows you the buyers and the sellers of the US debt. US Treasury securities, foreign holders, China. You could see that China has continued their pace of sales right here, continuing. Remember, this has been going on for a long time. Okay, there was this big dip down that appeared back in 2016 into 2017, but look at the long-term trend. It's truly excessive looking at this, and it just gives you some idea of where they're heading here. They're clearly slowly going off of the dollar. That seems like the way it's going to be. And if this continues on, perhaps into next year, they may dip below $1 trillion. Still a large sum, no doubt, but it is on its way down, it seems like anyway. You can compare the world's gold reserves to the world's treasury holdings, and it just gives you a little bit of insight as to what's happening here. From 2019 into 2020, there was just this massive rush to buy gold. And then that has been fluctuating ever since. World Treasury holdings kind of have been flat around this level for many years. So there's always that insatiable appetite of the US debt, but because so much debt has been added, they need even more to come to the table. But who will that be? Of course, the buyer of last resort, the Federal Reserve. Net foreign purchases of US equities, however, have absolutely surged. If you take away 2020 from the equation, because of course that was certainly an anomaly in many respects, this is one of the highest we have seen, and the chart goes back to 2007. So there's a lot of demand right now. And last thing, wanted to end off with this. I got a chance to include it. US container ship bottlenecks lurches near its February record. So imagine all of that chaos that was happening early 2020 and then bringing it all into this year. There's been these periods of time where things are getting stuck. Then, as you know, it's easing off a bit and things get stuck again. Every few months, this is taking place. So we'll see, because as we head into Q4, things only get worse. Okay, this needs to be resolved in the next month, or else we are going to have issues, because there's so much of these shipments, so many of these shipments that come in through that Q4 timeframe. As people start loading up, those docks usually get very busy. So imagine with all the bottlenecks on top of that, it's going to be an interesting one. The prices are already sky high. Well, we got to this point in the video. I wanted to ask you, if you're not already an insider, why? Why haven't you joined the insiders? You've got to do this, because that's my way of getting to you directly. That's my way of being able to get around the censorship and the bottlenecks for me to get this information to the people who need to know the truth. And this is, of course, totally free. You will get the video of the day 5 times a week. I will email that to you. It is available at themoneygps.com. And if you haven't already, hit that thumbs up button. When you do, you're supporting this channel. If you haven't already, you've got to see this video I did yesterday. Definitely check it out, click it, and I'll see you there.